Investors are digesting retaliatory moves from China after Trump's 10% levy went into effect, while proposed tariffs against Canada and Mexico are on pause until next month. That was thanks to short-term agreements between world leaders. Douglas Holtz-Eakin, he is American Action Forum president, also the former director of the Congressional Budget Office, joining us now. Doug, it's great to have you back here on Yahoo Finance. The White House has been quick to say that this isn't a trade war. That's very much up for debate right now. I'm curious just to get your assessment of what has played out over the last 24 hours.
Well, I think it's been remarkable. Certainly, I think the first thing to note is that we still have the potential for large tariffs against our three largest trading partners, over $1 trillion worth of trade. And Canada and Mexico are on hold for a month, but that damage is still lingering out there. I think we learn a lot by China's response. Around the globe, every country is prepared for U.S. tariffs, and they are prepared to retaliate. And they have been planning their retaliation to do the maximum damage on the U.S. and the minimum on their economies. And so this is very different than President Trump's first time in office, when these tariffs took a lot of people by surprise. I don't think there's any real surprise value here. And I think the real question that has to be asked is, what are we getting for this? I mean, the Canada and Mexico deferrals seem to have accomplished very little. These are things that were largely in place anyway. So what is the end game the president's seeking? What does he want from Canada and Mexico? Those are questions that are still yet to be answered.
What is it, Doug?
What does he want? I don't know. I think he got very little out of the negotiations. There were 15,000 Mexican troops at the border already. We already had the Canadians stiffening their border controls. If it's not a trade war, if it's meant to accomplish something, that seems to be done. Why not take the tariffs off the table entirely?
Doug, when you talk about this time being a little bit different here and this being largely telegraphed, even prior to Trump 2.0 initiating and commencing, now you have the activation of tariffs and the tit for tat that is starting to be spelled out. What does that tell you about the time span that we could be looking at this time versus the prior Trump administration?
Well, I think this is just the beginning with China. China's in a separate category. The president's made that clear all throughout his campaign. As you know, investors have been anticipating this. You saw it in all the market reaction yesterday. So, China, this looks like a 4-year engagement, this is genuinely a trade war. I don't think there's any pretense otherwise. China's responding with economic measures, investigations, export controls, tariffs on U.S. goods. So that's one category of activities. The president has also promised tariffs on pharmaceuticals, steel, aluminum in the middle of the month. Again, those can't have any great non-economic objectives that he hasn't spelled those out. So this really is a promise to engage in a large-scale protectionist trade war. The damage that will do to economies on the globe, I think, is really quite potentially large, and that's something that's to be concerned about.
Doug, what do you think the revenue raise is ultimately going to look like here from the tariff strategy and what we've seen so far?
I don't think the revenue is going to change the U.S. fiscal position significantly. I know the administration talks about that, but if you look back to his first presidency, the revenue wasn't a significant driver of the budget outlook. If you go back to his favorite president, McKinley, tariffs revenues were single-digit percents of GDP, and the U.S. federal government now spends over 20% of GDP. So this is never going to be a significant revenue source on the scale of an income or payroll tax, and I don't think it should be viewed from that perspective.
And what about the inflationary correlation from your perspective, Doug?
I'd be worried about that. Certainly, inflation has been stickier than the Fed had hoped. It's been stalled for about the past 6 months in the same range with no perceptible progress. This goes the other direction, and so threatens to keep inflation elevated above the 2% target through 2025 for sure, and maybe even longer. So I think that's a concern everyone should have.
Doug, I'm curious, and you and I have talked about this over the last several months in the past, but Elon Musk's role within the government, obviously we've heard a couple of initiatives there from Doge ever since the inauguration. I'm curious just to get your perspective, given your history, given your experience, what you think, how you see this playing out.
That's a great question, and I wish I could give you a better answer. I don't know. The role seems to have morphed over time. It was an outside group, largely advisory to OMB. That's how it was originally advertised. It then became, via an executive order, a renamed U.S. digital service, and that had a mandate to modernize software and technologies. But what we've seen over the past week has been a full-scale assault on USAID, something which is well past the narrow mandate in the executive order, and now promises to take on the Department of Education. I think there's some real questions about how far this can go legally. Certainly, Congress appropriated those funds, and not spending them raises the specter of a real battle over impoundments, something the administration, I think, is looking for. They would like to restore the president's power to impound funds. It was taken away in the 1974 Budget Act. I think we're going to see a protracted legal fight over the funds that are not being spent now at USAID and maybe not spent at the Department of Education.
Yeah, exactly. Doug, if you were just to identify the biggest risk that this then imposes or potentially presents here for the U.S. economy, Americans at large, what would that be?
I think the biggest risk goes back to the tariff war. If we get into a real tit for tat with Canada, Mexico, and China, the damage to global growth is going to be significant. The damage to the United States is going to be very real. And it'll come with inflationary pressures. It'll be the worst of all worlds. High inflation, slowing growth, perhaps even heading for negative territory. That's the last thing anyone will root for.
Doug, thanks so much for taking the time here with us this morning. Really appreciate it.
Thank you.